Good day, all. Ira Epstein of Linn Associates with your financial market update. And this update is for Thursday, and we are now at the 29th of July 2021. And the time, if I look at a chart, I can give you the exact time, and it's right now 7 p.m. So we're just approaching that. Interesting day. Yesterday I thought, and I showed you when I had started off these updates, my take on what the Fed had said yesterday in the announcement and Fed Chair said in his speech. I thought it was bullish because he didn't surprise the market. If anything, he said tapering, they can discuss it all they want. They're not ready to taper. Well, you're not going to raise interest rates in front of tapering, so they're doing nothing for a while. I read today in the news where some of the reporters were saying, well, Jackson Hole's where the next announcement will come from. Yeah, the announcement of nothing. They're looking at it. They're concerned about employment. Employment between now and September is not going to change very much, okay? People are still in 25 states getting those checks. Those people getting those checks are the price point people, the wage type people that take a lot of the service jobs that fit the restaurants and other service industries. You have a new problem happening. The kids are going to go back to school that have taken up a lot of those jobs. If you can't get adults to fill them, you got an even a bigger problem. I went out to dinner, and all I keep hearing from my friends, I got a new problem. Some of my staff is going back to college next month. What do? I can't seem to hire anybody. There are problems out there. The Fed said it. If you're betting that, it's all going to change September because those checks end, well, to a degree it should, but it's been eluding us. All right, enough said with that. The other event that happened, the Fed talk. Remember, in Asia, when the Fed speaks here at 1:30 Chicago time, it's about 14 hours later in Asia. Well, that makes it 5:30 in the morning. You don't get your real reactions. People wake up at a certain hour. Most people, they're not like me at 4 in the morning, and they're moving on, doing whatever they're doing later, and they're looking at the markets. Asia liked what the Fed did. Europe liked it. It came home to roost, and the markets here liked it. All right. By the way, let's come back here. For the week, we're down 0.37%, not quite, just about 1/3 of a percentage point for the week, and we're not yet into the Friday close, obviously, so we'll see where that all comes in. The market went up, made the high, and it's backing off right away. Okay, you can see you're in a resistance area. When we put the swing line on it, what do we have? We have a pattern of higher lows and higher highs, and lo and behold, the market's down a whopping 30 points tonight. Okay. So I look at that and I say, well, what does that mean? Well, so far you're still well over the 18-day average of closes. I like that, if you will. That number is going to be around the 43.60 level. You haven't taken out the 43.64.75 level. The upper Bollinger Band was not hit on the run today. That is still a potential target. The market seems to be stuck in these bands. I recognize that right away and say, okay, the first challenge of the real resistance area off the Bollinger Band's around the 44.39.5 zone. And I now have, my friend, the embedded reading, which means the market has converted itself as of the close. Now let's take a look and be sure that I know what I'm talking about. Both numbers were not over 80. This was Monday. Tuesday, both numbers over 80. Wednesday, both numbers over 80. Thursday, both over 80. We're a Friday trade now, right? So you embed it. Embedded readings to me means that the market is going to be looking at the condition of buying on pullbacks in this marketplace as long as you haven't first taken out the higher high. And the trade, I think, will dump this if the red line closes under 79. So I'm in the bull camp on that. The next thing that we're going to go and look at is the NASDAQ. Well, it's not an embedded reading. Momentum overbought, begun the correction phase. If you take out 14,774.25, you end up with lower highs, lower lows. Right now, you still have the pattern of higher lows, but suddenly you have lower highs. You've already taken out the lows of today, Thursday, in the early evening trade. That's not the place to be. The Dow is screaming like the S&P. Pay attention to me. Pay attention to me. I embedded. So, classroom, we're going to do that. I think the market's going to be looking at buying this market and out if it loses the embedded reading with the close under 79 and the red line is targeting 35,284. In the Russell, The Russell, while it's come up, it broke its downtrend when it got over here. Notice I finally got those arrows right this week. That's your next resistance point. That does not mean it can't go higher, but it's at an area here that if you were to buy it, let's assume you bought that line in the sand, the 22.1360 area. All right, are you going to want to risk all the way back to 21.64? Duh, that's a lot of money. I don't think so. I think you'll wait on, most people would wait on another chart pattern. Doesn't mean I'm right. Doesn't mean that I know what everybody's doing, but that's my attitude. VIX cash is back into a downtrend. Lower highs, lower lows. The settlement today, 1770, is under the 18-day average, but it's already oversold. But the trend is down, the bias is down. 30-year bonds. Doesn't seem to want to pay a lot of attention to the Fed. It's sort of content now laying against that 18-day average. Could the next move be to the downside? Well, we don't know. So far the trend is higher lows but lower highs. Is that a trend? No. Bias has been aware, up and momentum down. The chart's a mess. I don't see anything to do right there. And it's identical problem in the 10-year notes. You have the higher lows, lower highs, better places to spend time. Dollar index, okay, between right here and down here is where I look for a lot of support. But you've broken the back of the dollar. This phase of that rally is over. The people that were talking, oh, it's going to keep going up, and I heard a number of them doing it. And when I got back, I said, I don't agree with them. You heard me say that. I think this market is peaked out, if anything, against that Bollinger Band. And this is Monday when I got back with you, and I said, I don't know. This doesn't look good to me. And it confirmed a downtrend on Tuesday. This is the remainder of what happened. And right here is where I think the pros came out. I teach this in my enhanced Bollinger Band course. Go to the website, www.iraepstein.com. Go under the word education. Take a look at the course. You'll understand what I'm saying, okay? So go do that after this. Oversold. And by the way, we're going to have our live webinars next week. So I'm back into the groove from that now that I'm caught up with everything. Eurocurrency, the mirror image of the dollar, just reverse it. What do you do the first time you hit an upper Bollinger Band and you're overbought? So long, team. British pound. What do you do when you hit the upper Bollinger Band coming right from the lower band? So long, my friends. That's basically what I do. I wish the market the best with it, and if it's not embedded, I take another look elsewhere. You trying to always move your money around. Do not get married to the pound, the euro, the dollar. That's nonsense. Get married to chart patterns. Remove the name of the chart. Bitcoin. Well, we'll see. It's the Gorilla Glue trade. It's hitting it every day, including today. This is early evening trade. We'll see if it finally decides it wants to back away. The trend is up. It's terribly overbought. I don't see new money being deployed up there for it. In the differential between Brent and WTI, well, right back down, and now back to that low point of $1.03. These markets are in uptrends, but they're terribly overbought. They're not even close to saying, come on in with an embedded reading. Overbought conditions, I love them. Just means that they're exhausting power to the upside, and they're all in uptrends. I see that, you see that, but how do you come in off of reasonable action and whatever you define reasonable? So we're extending the break in the indices, no surprise to me there. The question is, do the slow stochastic embedded boys step in and buy, and where do they do it? Well, if you get my research, you already know. My traders tonight will see it when I publish the full research, and for the rest of you, you'll have to wait for the morning. I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow.